Hello and welcome to ET Now. Today I am joined by a very special guest, R. Doraiswamy, CEO and MD of LIC, to discuss the quarterly performance by LIC. Thank you so much, sir, for joining ET Now. Stellar set of numbers in Q1, sir. So help us understand. We have seen that value of new business, VNB margin is much above the expectation what Street was expecting. So what really worked in Q1, and do you agree that AP growth or new business premium growth is not as per the expectation?
Thank you, Anurag. Actually, our performance in Q1 has been good, and a good improvement in VNB and VNB margin thanks to the product mix change that we have been taking for quite some time. The increase in the performance of particularly the lines of business like savings and protection in non-par segment has been a contributor for this growth in VNB margin, and it has been good. As you said, we could have done slightly, we expected some more improvement in APE, but since the focus on the APE growth has been there since last year, we also had a small impact of the base effect in terms of APE.
Okay. Sir, VNB margin is up by 7.5% as compared to last year. So how much the non-par products contributed in this VNB margin?
Substantial contribution is from non-par products only. See, what we have been seeing, the margins in both non-par and par has been improving, and simultaneously the VNB margins from group has also improved. We saw an overall improvement in all the three sections of the business that we do. Individual non-par, individual par, as well as group. All the three have contributed. Particularly the growth that we witnessed in terms of non-par savings and non-par protection has contributed for this improvement.
And so it's not only protection only, other products also contributed in the non-par.
Yes. Non-par savings have contributed, and par has also improved its margins now.
Okay. And so now the non-par share of the individual APE is more than 30%. It's around 32.5%. So going ahead, what product mix you are targeting? It would be 35-65 or 40-60? Because from pre-IPO, it has completely changed.
Yes. You'll be aware that we were at 8% non-par share when we went to the IPO.
It was 90-10.
Yeah. And subsequently, we have been showing good improvement by way of a directional change in product mix. We could achieve what we have reached 32%, 68% now. We expect the share of non-par to be around this area. We are planning something around 1/3, 2/3 is what we have been working towards. And so towards that, this numbers is good. We can consolidate. It can be a 35-65 or a 30-70. In that range is fine with us.
Okay. And sir, are you revising your VNB margin target also going ahead for whole fiscal?
See, VNB margin has multiple components. The focus that we have been doing is on improving the product mix. That is one contribution which has helped in this. And also on the rationalization of expenses and the stabilization of the expense ratio. So improvement in expense ratio has also contributed. The third factor that contributes is the risk-free rates, which is market-driven. So we don't have a control on that. Given current circumstances, yes, we are working towards some more improvement in the form of efficiency improvement and the product improvement. Both are contributing. And as we also did in October 24, when the new master circular came, we also realigned our products to meet the requirement of the new master circular. And one step that was taken was to increase the minimum ticket size. So that is also contributing. The policies with lower ticket size tend to have lesser margins, while the higher ticket sizes contribute because of the per policy expense getting lower when the ticket sizes improve.
Okay. Sir, now you have added new shareholders also after the OFS. So for many merchant bankers, the OFS date and timing was a surprise. So was it a surprise for LIC also? And now how things will change going ahead? Is there some assurance from government that in next 1 year, next 1.5 years, there will be one more OFS or no OFS?
It was not a surprise. I won't call it as a surprise.
No, date and timing,
the
sir.
The government and LIC, we have been working towards this. And it was expected that when we went to the market part of the IPO, the dispensation given to us is that in 5 years from the date of IPO, the public shareholding should have come up to 10%. So initially the IPO came up only with 3.5%, and 6.5% was what was required. We could have, government could have done it in small tranche or to go the full length. So the market response has been quite encouraging, and so the government took a decision to go with the 2.5% offer with a 4% green shoe option. And since the first day itself, the response has been very good. They have decided to use the green shoe option also. These dates were more or less on the cards. It was not a big surprise. Okay. And now that we have achieved this 10% public shareholding norms ahead of the schedule of May 27, yes, the government has got another more than 5 years, till 2032, to reach 25% public shareholding. So that means only 15% more to be offloaded, and I don't think government will be thinking of another offer in the next immediate 18 months to 24 months. This is what what the market was also expecting, so that there is no supply overhang which affects the price of the shares. We do not expect any immediate offer coming from the government side, but of course government has a right to have try and bring it anytime that they would like to have it.